Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at Whirlpool. This is actually a company out of Michigan where I live. It is December 28th, Wednesday, one of the last trading days of the year. We've got a couple more days in the year here to trade, but today we will take a look at Whirlpool. This is out of the consumer discretionary sector. I'm sure you are familiar with the company. Let's jump in. If you want to know more about this company, check them out at www.whirlpoolcorp.com. That is their homepage where I pulled this information. Some of the brands they have under their umbrella: Whirlpool, obviously, KitchenAid, Maytag, Indesist, Hotpoint, Console, Brastemp, Amana, Genair. I don't even know how to pronounce them. I'm not going to try. Across, Dequa, Swash, Yumly, Gladiator, Every Drop, InSync Aerator, and a couple other things I wanted to focus on. 111 years of history. So another one that has been around and seen the downturns throughout history, right? The Great Depression, the Great Recession, 2008 to 2011 housing market crash, dot-com crash, 70s crash, 80s crash, you name it. Seems like every decade we have a crash. But they have been around, probably have some Maytag or Whirlpool or KitchenAid appliances in your house, or know someone who does, right? Our founding families, companies began in the United States, Brazil, Italy, Canada, India, Germany, and France. So that is another one I wanted to focus on. They are a company that sells their products around the globe, right? So if we have a slowdown in one area, hopefully you don't have a slowdown in all areas, which we kind of do right now. So this one, being consumer discretionary, right, might be one that has hit a little harder than other companies with the pullbacks globally that we are seeing, right? Not just here in the United States, but Canada, India, Germany, France, all over the world. It seems like we have a pullback. And like I said, from Benton Harbor, Michigan, that's where I live. So it is one here in the state of Michigan where I'm from. Again, if you want to know more about them, check them out, www.whirlpoolcorp.com. That's their homepage. And the reason we are taking a look at them today, down 2.35% on the day, closed out the day at $138.36. We are talking about Whirlpool Corporation, ticker WHR, out of the consumer discretionary sector. And this information is brought to you by Yahoo Finance. I am not affiliated with Yahoo Finance, just where I like to look for information. And I always recommend more than one source, so you will see another source here in a moment. But here we will look at the 52-week range. So as low as $124.43 for the stock price and as high as $245.44. Definitely closer to that 52-week low, though they do have some further to drop to hit that 52-week low. Average volume is 795,000. Today's was 299, so less volume than typical, but it looks like it was all in the selling direction. Market cap of 7.538 billion, a beta of 1.52, so they are more volatile than the overall market. You can clearly see that volatility. PE ratio is a little elevated in my opinion, 21.62. Earnings per share is $6.40. Next earnings date is January 25th, which I will be watching this one closely. You will see why here in a moment. Forward dividend is $7 paid out annually. This is a quarterly payer, so divide by 4 here. Dividend yield is creeping up there at 4.94. Ex-dividend date, November 17th. That was their last one. So if you bought them now, you would not get the next dividend. You would have to wait for the following. And according to Yahoo Finance, their one-year target estimate for the stock price is $144.57. Now we will jump over to stockanalysis.com. This is another site I like to go to. Like I said, I always recommend at least 2 sites. You don't have to use this one. There's Motley Fool, there's Seeking Alpha. There are a bunch of different sites out there. Just make sure that you are looking at more than one site to get your information, to collaborate. The information is correct and you are not being misled at all or given not updated information or incorrect information. And according to stockanalysis.com, they have 18 stock analysts that have looked at this. They call it a consensus hold. I would actually tend to agree right now on this company that it is probably best to hold, even though I am looking to buy at the right price. They have a low estimate of $102.01. That would be a 26.29% decline from where it currently sits. And I would love to back up the truck and be buying at this $102 or even lower. They have an average estimate of $147.46, and this was pretty close to what we saw on Yahoo Finance on the previous page. And if it happened to hit their high, $231, that would be a 66.91% increase in the stock price. All the while, you would be collecting that over 4%, nearly 5% dividend yield, at least if you bought them now. Obviously, if you bought them lower, that dividend yield would be higher. And if you bought them higher, that dividend yield would be lower. They are inversely correlated, right? And now, like I said, I am long Whirlpool Corporation. I have 26.292 shares. My cost basis is $142.45. I've been buying anything under 140. They currently sit under 140 at 138.39, down 2.33%. We saw that. So I have $3,745.45 into this position currently, and it currently sits at $3,638.55. So I am down 2.71%, or down $106.90. Quarterly payer, this is what is concerning to me right here, 103.60. When I started buying them, this was not the payout ratio, so something has gone on here where this has been elevated, so I need to look a little bit deeper. And I'll be honest, if this continues to remain elevated, it may be one that I look to trim or even remove from the portfolio. In my opinion, anything under 75% for stocks is safe, especially stocks that have been paying for a long time. And this is a fast grower as well, 28.44% dividend growth, but they won't be growing very fast if they are paying out more than their free cash flow. That is a bit of a concern. Again, they're 1.75 per share per quarter, right? That's their payout currently. So this one here is a little concerning to me, probably the most concerning to me in my portfolio, but I thought I would cover it because we should always be looking at the positions within our portfolio to make sure that they still meet whatever reason we bought them, whatever the fundamental reason that you picked up a company. You should make sure over time, check it quarterly, every 6 months, every 3 months, at least review, does the stock in your portfolio still meet the criteria that you picked it up at, right? And this, to me, again, 103.60% payout ratio, that's a little alarming. If it remains elevated like this for more than a quarter, or two, I would probably look to trim this out of the position altogether. And I definitely would not look to be adding to this right now at this, unless it drops significantly. I mean, if this dropped into the $100 range, I would probably add to it and look for price appreciation versus the payout ratio, with the understanding that this dividend could indeed be cut, right? Well, that is really it. Looking at the market, trying to find value when we can. That was one of the stocks in my portfolio that had dropped down the most, which it is not surprising why. Anytime a company gets over 100% payout ratio, unless it's a REIT, or a limited partnership or something like that, where they're paying out significantly more or have to pay out 100% of their 90+% of their free cash flow like a REIT does, then it's not as concerning. But for me, for the most part, if it's not a REIT, a limited partnership or something like that, I'm looking for stocks that pay out 75% or lower, right? And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that like button, share with anyone you think that might find value in the content, drop a comment down below. Most importantly, subscribe to the channel, and don't forget to hit that notification bell so you are notified whenever I drop any new videos. I post videos like this one here, stock pick of the day videos, Monday through Thursdays typically. If it's not a trading day like this past Monday, I might put out a different type of video like I did my 2023 stocks that I'm looking to add to my portfolio or add to the positions already in the portfolio. So if you haven't watched that, go ahead and check it out. I also do portfolio updates on Sunday. So you'll see exactly what's going on in my portfolio. If I buy something, if I sell something, dividends that are paid out for the week, I cover all that on my Sunday videos. I do not have a paid Patreon account. We all have enough to pay for, so it's free to see what I'm doing with my portfolio. Like I said, dropping a like, dropping a comment, and most importantly, subscribing to the channel really does help out a small YouTube channel like myself, helps with the algorithms, and helps to get the word out to other people. We're all looking for that passive income, or at least that's what I'm into. So again, join me on this journey to financial freedom. Hopefully you are on your own journey as well. Go ahead and drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, comments, criticism. If you have some things you don't like about the videos, go ahead and drop that down there below. Let me know what you think. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest your educational and temporary purposes. Investing involves risk. Can't lose money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.